Everybody, Michael Martin, thanks for being here. So I get questions a lot that don't show up in the comments section on YouTube, but are emailed to me through the blog. And one of them is, what's your secret to success? What is the secret of what it is that you do to become a consistently profitable trader? And the truth is, and it's true in all areas of life, we're basically the sum total of all your behavior, right? You've heard me say on the show, behavior predicts where you end up. That's kind of what I'm getting at. So I always looked at trading as it's a bunch of do's and don'ts. And I thought of that, that sounds like portfolio management. So in my mind, not am I only managing my stops, which I'll get to in a minute, I'm constantly looking at like adding and removing behavior to increase my expected value of a trade. That's really what you should be optimizing, not your winning percent. That's when you need the emotional win, right? So I've always looked at myself as like the sum total of all my habits, which hints to the fact that trading is an experiential type of process. You can read books, and I think it's fun to read books. I like them. I got a million of them. People send them to me. But at the end of the day, knowing all that stuff doesn't help me make money, right? So I don't know if there's any one particular secret, but if you want to know like what my portfolio of habits are, of things that I do and I don't do, I can kind of get into them. For one, I don't take small gains. Even though I grew up clearly in working class blue collar despair, when you're making money, once you have money, there's commas in everything, right? So you can't get psyched out from that. So I don't get excited about small gains. To me, as I've said in an episode earlier this week, that's when I'm just kind of getting started. Now, it's true, I would look at that money and say, holy cow, within a few minutes of being in the trade, I could see what I've made, maybe even as in the summer when I was working at the golf course or waiting tables. Or sometimes if I really let them run, you could make several years of salary from yesteryear in a single trade if you let them run. Unless I get stopped out or there's a big like 2 or 3 standard deviation move in my favor, and I know the market's given me a gift, I tend to avoid day trading. Admittedly, sometimes the environment is make it and take it, but I generally want to let my winners run for as long as possible. That means I'm taking risk home overnight, and I'm taking risk home over the weekend. Trading one instrument. Although I've made a good chunk of money with the softs, coffee, sugar, cocoa, cotton, and stocks over the years, I tend to be promiscuous in my thinking. I don't, like many of you, probably because you have low margin in your account, you have to worry about the MNQs or these small contracts. But that means you're forcing trades. You're like, this is the vehicle that I have to trade because I'm underfunded, and I'm trying to fit a situation on top of the thing. And by God, if I change the 1 minute, 3 minute, 5 minute, 15, 65 minute, I'm going to find something somewhere. So that's acting out of desperation generally. Don't do that either. I mean, two, I've mentioned this till I'm blue in the face. Don't trade your P&L. If you look at your P&L during the day, you're going to be induced to do stupid things with your money, which is like, number one, don't take small gains. Learning 85 chart patterns. If you want to pick one, right, which we'll talk about the positive, look at cup and handle. I'm not recommending one, but pick one of your favorites, like cup and handle, volume compression patterns, whatever they're called. There's a lot of names for the same things. Focus on one and then look for that across as many instruments as you can find during the day. They didn't exist. I was lucky. There were fax services where you could join someone's newsletter and they would fax you a report every day. That was kind of funny. But I would stay off the telegrams and the discords and whatever the groups or the private Twitters. You have to be your own thinker, right? I would stay away from zero DTE options. You want to give yourself plenty of time. And also another general was like over trading. You might get into emotional things if you're taking losses and you want to kind of revenge trade. Over trading and revenge trading are very, very, closely related. In the end, you have to remember the market doesn't know that you're in it for the most part. It doesn't care. So your first job is to always protect your capital. So there'll be times where I've put on trades and the thing stalls and there's no momentum follow through for like a day, 2 days, 3 days, in which case I think I have bad timing. I'm not losing money, but I'm also not making, and I always have lost potential. So one of the do's is employ time stops. If you expect something to move and it doesn't move, get out of it and come back at another time. Because whatever you thought was the catalyst No one else thought that. They didn't think of other ones either because the thing's not moving. So let your markets run. Always use stops. I use stops to enter. I use stops to exit. I never use market orders because market orders to me are impulsive. And unless you have had specific trading, right, at some of like my friends' day trading firms, then tell me to shut up. But if you're trying to do this on your own without any coaching or otherwise, market orders to me are impulsive. And I know because I'm impulsive. I'm an impulsive guy. I rely on instinct quite a bit. I have really good intuition. But I have to temper that and give myself a moment of pause. Go back and review my notes, which I do very, very frequently. I would also encourage you to experiment. I'm always trying new things. Sure, I have my set behaviors, which has gotten me success, thank God. But at the end of the day, you know, you need to try to experiment because the markets are always going to change, and patterns that really worked very, very well last period, last quarter, last year, last 5 years, they will morph and they'll have to be adjusted. Ding, 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 light bulb goes off. So you need to experiment whether you want to use a trading blocks or Mechanica type of simulator and test at the portfolio level. Maybe you want to test on an instrument basis. I would be careful not to data mine or curve fit if you're just going to look at one instrument at a time, because you could always go back and find the right parameters that worked really, really well in the last 2 years. But look at how the thing did in 07, 08. Look how it did coming out of 9/11. Try to put yourself under the worst scenarios and then test your ideas in those difficult times. And do anything that you can to increase the positive expected value of your trade. That could mean increasing your winning percentage, but it could also mean adjusting the asymmetric risk reward to risk ratio. If you've been looking for 2-to-1s and 3-to-1s, try to be a little bit more selective and find 4-to-1, 5-to-1, right? A good example of where you can find those bigger ones is like at multi-period highs, like 10-year highs or something like that, historic highs. And look for those 5-to-1 trade-offs, because if everything else being equal and your accuracy stays the same with these new instruments in a new environment, you might find that your expected value goes up just because you have a more watchful eye. You see? And then repeat those winning behaviors, right? It's one thing to do them because it's experiential trading and things don't necessarily feel good when you're trying out new things, so you try them very, very small. But you have to remember that for all the paper trading out there, for all those demo accounts, that's not real trading. So I wouldn't get emotionally invested in the outcome of what you're doing with demo money because it's not your money. I would never hire someone who did very, very well with a demo account, for example. And I know there's these funding sources and all this and that, but the rules are very crazy. And you'd have to really stick to your own knitting if those were going to make sense. One of my greatest skills is preparation. And again, I was lucky when I started on Wall Street. We had to read a few books that were very, very helpful. Obviously, Napoleon Hill, Think and Grow Rich. I remember talking to my branch manager about Thorstein Veblen, Theory of the Leisure Class, which talked about conspicuous consumption. And of course, Art of War. Karl von Clausewitz as well, his treatise on war. But in the Art of War, we learned about, preparation, right? And to me, one of the biggest parts of the mental game of trading and how to be consistently profitable, or how to have consistent profits, right? Because they're kind of related, but they're really different in some way. You could really fine-tooth comb it to death, was to have my preparation down. What could I anticipate that was going to happen? Knowing that prediction is very, very difficult, even for people like myself who have really great intuition. To think about preparing, like, what are all the scenarios that could possibly happen, right? So you see, right, during NFL football games or even in baseball games, they'll often shoot the camera into the dugout and they'll show people looking at tabs or these big pieces of paper that have been, they had to put the plastic on them. And they're looking at plays because they've anticipated certain situations coming up, and they have a list of plays that they think could work. Now, there's discretion in that as well, for sure, but they've done their preparation to have at least an idea so they don't have to decide on the fly and pull something out of their back pocket, so to speak. And so I spent, and still to this day, an enormous amount of time in preparation, right? You can't prepare enough. Now, of course, you can make it more efficient. You can use computers certainly to help you to run your screens, and that's very, very helpful. But that to me is of paramount importance. If there is one secret out of all the do's and the don'ts, I would say that your level of preparation is going to directly be correlated to your consistent performance because it shows me that you're ready to win. You have to be ready to win. When I was a manager on Wall Street, and we used to, have before people could open accounts electronically, I'd see people walking back with like duffel bags and attaché cases and valises and this and that. And one day, and it wasn't to put people on the spot because I don't believe in tough love. I just asked everyone to open up the thing and then to hold up all their new account forms and the ACAT transfer forms. ACAT stands for Automated Clearing Account Transfer. It's kind of like an umbilical cord that you set up between one firm and another. So if labor migrates and people change firms, they all agree to make sure that the process happens relatively smoothly. And so show me your retirement account, because a different application, your regular account application, and your transfer forms. And out of 20 people, like 4 or 5 had it. And so I just said, look, you have to be ready to win. You might meet somebody on the train. You might meet somebody at lunch. You might meet somebody in passing. You can't even fathom the different ways that you're going to meet somebody. And stranger things have happened. Now, even if it would be completely corny to just pull out hey, here's a new account form. Let's get started today. Sign the form. Okie dokie. Yeah, of course that looks corny. But the spiritual part of what you're sending out to the universe is like, universe, God, whatever your belief system is. Remember what I said? What was it yesterday? Thank you for all these great abundant gains. Thank you. I'm ready to win. I can't believe I have so many abundant gains coming to my outsized gains. My count's blowing up, not blowing up the bad way, but blowing up to the upside. You send out the energy to the universe that you're ready to win, and you carry yourself that way. Now, as traders, we spend a lot of time by ourselves, right? So there's nobody here. Hello, I talk to myself a lot. I literally do. I'm doing it now. You carry that energy with you that you're ready to win. And I know some of you like to day trade, or you're at least trying to do it, and so you're looking for the morning catalyst. But you can still see where the momentum trades are the night before, even if there are no catalysts. Where are their continuation patterns, right? I'm not the guy who invented this. So you could look at those so that at least you start with a smaller list. You could probably come up with 6 different names, even if you're just even looking at the 52-week high list at the close of business every day. You can kind of come in and say, okay, I can't afford a $600 stock and we don't trade options here, but I could find things that trade between $10 and $40 a share, for example, and have that list ready to go. If they have over 1 million shares, you don't want to be involved in things that have, that's another one. Avoid thinly traded instruments. It looks great when there's a short squeeze, but when there's no volume there and something moves very, very sharply, you realize like, wow, position sizing matters. You can, so I would say preparation is absolutely important because it also gets you in the mindset that you have a clue when you're walking into your desk in your office or going to your trading setup in the morning, where if you're working remotely or working from home, you can absolutely, pull all that together. I have just found that being prepared or having an idea of what could work sets me off on the right tone for the day. Like I don't feel like I'm unprepared. Like that's my biggest fear. I don't know. There's been a whole bunch. I think Derek Jeter said something like that. The great Yankee shortstop, Hall of Famer. The worst thing to do is to be unprepared. Right? It just makes you feel like, man, that's because that's losing. And I'm not calling anyone loser, but for me, I would say that's losing behavior. Right? Because that's what I'm trying to discuss here today. If there is a secret, it's all behavioral. It's not. We don't get paid to know things. Right? We get paid to be able to execute. So narrow everything down, get your preparation ready. Sure, there might be another 5 names if you had 50 coming in that you were at least looking at, or they were in the neighborhood. They still need to ripen on the vine a little bit. You can still review that list much more quickly than you can to try to go through everything, right? And then look for, okay, so then you do have a couple of catalysts. Maybe there's some earnings reports, or maybe there's economic reports, or maybe there's the energy numbers that come out Wednesday and Thursday, or then the crush numbers for the bean complex. I get it. There's a million things that you could look at that may or may not have certain type of magnitude for you to want to either enter or take risk off of a trade. But that's the key to me, preparation, because it puts you in a good mindset. And if in New York the markets close at 4, somewhere between 4 and 10 o'clock, you have 6 hours. You can easily do 30 to 60 minutes of prep work, or even if nothing else, a post-mortem, right? A post-mortem of the previous day. Um, and then go through your trades and see what did you execute very, very well. It doesn't matter if you made or lost money. There's been times where I've lost money for a couple weeks in a row, but I traded well. So you need to get your head around that it's not necessarily about making money every day. It's putting on trades that have positive expected value and then sticking with that behavior. Because sooner or later, the markets will turn, they will change. Now we can get into, again, more fine-tooth combing things and talk about trading your equity curve, which I mentioned, where you can cut your equity if you're in a losing spell. You could also say, like, I don't want to lose more than 5% in a week, or pick your number, or that you don't want to have a month that you've lost more than 10% or a double-digit number on the downside. And so, if you've lost 3.5% and it's Wednesday, you might tread very lightly for the next 2 days so that you don't hit your 5% drawdown for the week. And if you're down 8% with 3 weeks into the month, and you've got another 10 days, you might cut your position sizing in half or 3/4 to kind of get back into a groove. Typically, when I've had losing streaks, it wasn't because I wasn't in the groove. It was just because the market wasn't amenable to what it was that I was doing. So I never take that personally. I think it's a mistake. Again, to add into the don'ts part of the secrets is to sit there and look at your P&L and say, my P&L is up. I made money today, therefore I feel good. That's a very tricky spot to be in. Obviously, there's trade-offs when you put on trades. But I don't think you can make a lot of money if you're taking peanuts. I also don't feel like you can, feel good about yourself for a long, long period of time taking small trades. You should really focus on making life-changing money for the work that you're going to have to do in this business and what opportunity that you actually have, because I've seen it. I've seen guys that are as dumb as the damn doorknob on my door go to Wall Street and make a lot of money. Why? Just undeniable focus. They didn't know a lot about most things, but what they were able to do was to hone their behavior down to one little simple process. Like I said, one chart pattern across any number of ideas, keeping your losses small and not overthinking things, not internalizing your losses and thinking that you're a loser because you're losing money. Are you kidding me? Bill Dunn, who's a legend and will go down as one of the greatest ever, had 3 years in a row when he was losing 15%. He's almost in a 50% drawdown. And that was purely systematic. And the guy he's retired now, but at the time, he had over $1 billion in assets under management. So you have to be careful that you don't necessarily become a product of your environment if you're surrounded by idiots or simpletons who think, that they could make all this money without putting in a lot of work. The work is in the preparation. The trading execution part is simple. That's the pulling of the trigger. What's the hardest part of being the sniper? It's sitting there and waiting. You're waiting and you're waiting and you're waiting. And then when something gets in your sights, what do you have to do? That's when you start adjusting the scope and all this and that. And so trading to me is the same thing. I don't think you need to have sniper-like accuracy, but you do have to have that type of preparation and that type of patience and then be able to execute. Keeping things very, very simple, not internalizing your feelings about making or losing money, not, carrying one day's trading into the next day. This is only something that you can get when you trade real money. The demo account stuff, it doesn't really count because there's no emotion attached to money that you're making or losing. Because if you blow up a demo account, you could just start over. And if you're paying for one of these funding accounts, again, another $40 or whatever it is that you're paying, you start over next month. So making sure that you're trading with real money is going to get a truer connection between you and the actual trading process because there's something at stake, right? There has to be something at stake. You need to feel the burn a little bit. And the burn isn't necessarily bad. It's just knowing that there is something at risk. If you're risking paper profits, who cares if you give it all back at that point because it wasn't yours in the first place? And who cares if you go into a 15% drawdown during the week because it's not your money. There is no money. It's good to get an idea for sure, if you want to back test a few things just to kind of see if it works. Does it have positive expected value? In my experience, if you have a very simple set of rules like that and they've worked for at least a decade, they don't typically not work on the 10th year and one day, the next day. They will change over time, but in my opinion, and from what I've seen, and I've done extensive testing with simulators and with stuff that I've done myself, you might see over a 10-year period of time, the expected value change from like 3.7 to 3.4 or 3.4 to 3.5. They're not gigantic swings. They do change, but it doesn't typically go, in my experience, from being like positive 3.7 to minus 1.8. I have never seen that. Excuse me. So this is what makes trading tricky, because you might be focusing, if you're struggling, on any one thing of the number of things that I've mentioned and amplified that to be a bigger deal than it is, because it's really the collection of everything. Like I said, it's a portfolio management of behavior. You let your winners run, you cut your losers quickly, right? And in the emotional part of the game, it's behavioral. So replicate and find out the great experiences that you need to have for your trading, and eliminate the ones that are suboptimal and aren't productive. And then enter the market with stops. That's the best that you can do, because you're powerless over everything. The only thing that you can do is control your behavior. And when your ideology part is in that transition to execution, you're doing that and you're bridging that using stop orders. So you're not acting on impulse. You're not chasing the markets. You're not acting out of revenge trading, right? You're letting the market come to you. You're not chasing. And that can keep you very, very grounded, because the goal is to find that process and then to repeat it, not just within the day, but then every day afterwards. Even if from time to time you lose money on a certain day or over a sequence of days. You see what I'm saying? You're very, very hard on yourselves. I have a sense, when I listen to people, they think like, I could take this guy's course, I could go listen to, videos, podcasts, I could read books, and then that'll help me figure this all out. It can certainly open up your thought process, but ultimately you'd want to even have a process for saying, like, if I read a new book, like if you go back and look at the video I did with Brian Shannon, when his new book on anchored AWAP, sorry, I said it wrong, anchored volume weighted average price. Sorry, Brian. I'm trying to think of a million things at the same time. And look on how you read the book. It's a good book. And then take one or two of the strategies and try them on for size. So don't just try to fill your brain with stuff, because it might feel good to be like have an encyclopedic knowledge, right, of trading and everything. But everything is a Google search away anymore. So 30, 40 years ago, it mattered to have a memory, because everything was on paper or it was verbal. Now everything is a search away, so it doesn't necessarily pay you to have an encyclopedic mind on any particular thing around trading. That's why I've said, we get paid to execute. We don't really get paid to know stuff anymore. You need to know enough, and you need to have a relative amount of accuracy. But you don't have to have 80, 90% accuracy, and you don't necessarily have to know everything under the sun. You need to know where you're going to get on, how are you going to adjust your position size for the prevailing volatility, right? What is your risk unit? How much of your cash and your account balance are you willing to risk on any one particular trade? And then based on that volatility and your position sizing, where's your protective stop? Then in the managing of the trade, as it moves up $1, then you adjust your protective stop $1. If it moves up another $1, then you can adjust it accordingly. If you want to use a percentage of the ATR, you can do that too, right? So at the end of the day, the process in and of itself is very, very simple. Maybe I'll do a video and walk everyone through a typical setup like that, but it doesn't take more than 60 seconds. And then that's the work. That's the emotional and the mental preparation that all can be done the night before. The day you walk in the door, it's all about, okay, what do I need to do to put myself in the right spot to go execute? When I started, way back when, even till today, and even for you, we're dealing with uncertainty. When we put on a trade, we're dealing with probabilistic outcomes. So I did my preparation the night before. My day of preparation, as I spoke about, I think it was yesterday, I can't remember one episode from the next. I used to go downstairs and walk around the block and say, thank you for all this abundance. I'm just so excited that I'm able to do this. This is really going to change my life. Then I go back to my desk, and then I would execute. But I wouldn't try to figure things out on the fly at that point. I didn't have enough experience. I didn't have my intuition honed. I didn't have the skill set. Just because you can see things in 1 minute bars doesn't mean you have the insight to understand what that's actually telling you. Short-term data is very, very random. You could look into things if you wanted to, but at the end of the day, I think the secret to success is finding a process that works, albeit giving yourself a little bit room to experiment, and then repeating that process day after day after day, and understanding that if you lose money, it's not the end of the world. If you stick with your system, with your process, eventually you'll come out ahead if you have positive expected value. Want to see more? Go check out these videos here.